Hey guys, Rafi here from the Endgame Investor with this week's silver report. Markets are closed. Good Friday, good Shabbos, good Yontif tonight, seventh day of Pesach, the splitting of the sea, 3,338th anniversary.
Who shall withstand the power of God?
And so I thought I'd do something different today rather than cover the markets because they're closed and they're going crazy anyway, and I can't really keep track of anything anymore. But I was contacted by a woman from Cointelegraph, which is one of these newspapers or websites that cover things that aren't really coins, but they pretend to be coins. And she asked me a bunch of questions and she wants to publish them in an article. And I don't think she will because I was quite sarcastic and edgy and facetious, as is my wont. So I wanted to publish what I answered her in full as to her questions as to gold versus Bitcoin and why I think what I think. Assuming that it won't be published on Cointelegraph, I'm going to read what I wrote here. This video is sponsored, as every week, by Koot-NAY Silver, symbol KOOYF in the US, symbol KTN in Canada. I was told repeatedly by commenters who are correct that it's pronounced Koot-NAY and not Koot-NAY, which you'd find surprising given that Koot-NAY is a Canadian company. So you'd figure that it would be pronounced Koot-NAY, but no, it's not. But on that topic, let's go into its latest drill results and compare it to what Grok says about average silver grades in functional active silver mines. Here are some of the main highlights from Koot-NAY's latest drill results published February 2025, about 2 months ago, down here in CDH-24-1943 zones. 119 grams per ton, 1,455 grams per ton, and 181 grams per ton. What does any of this mean? We go to Grok. I asked it a question about the average grade of silver in active silver mines. Grok tells me the average grade of silver in active silver mines varies widely depending on the mine and whether silver is the primary product or a byproduct. For primary silver mines, of which Koot-NAY is a primary silver miner. It's not exactly a miner yet. It's an explorer. It is exploring assets to offload to an active, large mining company. For primary silver mines, of which Koot-NAY is an active explorer of, the average grade in 2020 was approximately 125 grams per ton. Keep that in mind with these numbers of 119, 1,455, 440, 139, 551, etc. You can see the whole table here at this link, which will be in the description below, of all of the grades and all of the holes in this particular project. As you can see, almost all of the holes in grams per ton silver are in the triple digits. One of them is in the quadruple digits. This is above average for an average silver mine of primary silver mining, which means that silver is the primary goal of these mines and not a byproduct of another metal that they're mining. If you are interested in Koot-NAY silver, check out KOOYF in the US and KTN in Canada. And we're going to go on with this week's silver report, which has a lot more to do with my answers to a certain Bitcoin journalist at Cointelegraph. Hope you enjoy on this Good Friday, Good Yontif, Good Shabbos. This is Helen Partz of Cointelegraph.com. This is what Helen Partz would look like if she were a cartoon, which she probably isn't, but I don't know for sure. She works for Cointelegraph, and these are her questions, and I will read them along with my answers right now. Helen says to me, and I'm reading, I'm curious about your general thoughts on how different is buying gold versus buying Bitcoin, especially speaking of physical gold. Which one of these assets is easier to buy? Why? And I answer, and I'm reading word for word exactly what I wrote, Helen Partz. So, in case she misquotes me, you have the full context here. Physical gold, I say, is very easy to buy. Go to a coin shop or a jewelry shop and hand a physical or digital wad of dollars to the guy behind the counter and then take what he gives you.
We happy? We happy.
Bitcoin could be very easy to buy if you have everything set up already. But if you don't, it's very difficult. It also depends on what you define as buying Bitcoin. Some Bitcoin people insist buying Bitcoin through an exchange is not buying because the exchange has it. And we've seen exchanges implode before and people losing their Bitcoin. Think Mt. Gox or that guy souped up on meth that everyone loved with those three initials, with the Jufro.
Did you know that FTX deposits were used to pay off Alameda creditors?
And the geeky looking girlfriend.
Most of Alameda's loans got called, and in order to meet those loan recalls, we ended up borrowing a bunch of funds on FTX, which led to FTX having a shortfall in user funds.
If you want to have Bitcoin in your wallet, then you will have to fill out a bunch of paperwork and scan your passport or ID into some AI program or whatever, then sign a paper saying you're not a money launderer.
This won't take too long, will it? Just a few simple questions, Mrs. Pritklers, and you'll be on your way. Great-grandmother's maiden name. Gee, we always just called her Booby. Your weight on the moon in kilograms. There.
And then you have to open a wallet, remember a string of random words, or copy it down and put it in a safe.
The combination is 1,
1,
2,
2,
3,
3,
4,
4,
5.
5.
Then copy and paste a gibberish code, and if you lose any of the codes or the power goes out for whatever reason, you're screwed. I tried to buy some Bitcoin once, which is true, I did, not through an exchange, and all this is what I was told to do, so I said, screw it. So, given the differences here, I'd say that physical gold is easier to buy. Her next question: what are the legit options to get exposure to gold to a retail investor? Are there any risks in those options? There is no such thing, I say, as no risk. Your options are: first, go to a coin shop or a jewelry store. The risk is that it could get stolen, just like anything else you own. 2, buy it through a service that vaults it for you. The risk is that it could get stolen by the service, just like anything else you own.
At least up to now that we've struck out with the vault, I'm disappointed about that, as I'm sure you are. This is one time in my life that pot of gold would have been a lot more fun than chasing the rainbows. I promised all the critics that if we didn't find anything, I'd sing a song. So, Chicago, Chicago, that toddling town. All right, I'm going. I'll see you.
Or destroyed, like the vaults under the World Trade Center on 9/11. 3, buy an ETF. The risk is that it could get stolen, just like Russian ETFs like ERUS were gutted by the US government, which I owned and which was gutted for me, and I lost a few $1,000s and I was upset when the Ukraine war broke out because they decided they didn't like Russia anymore. The same could happen soon with Chinese ETFs. 4, buy gold mining stocks or silver mining stocks. Same risks as any other stock you may own. And one of the stocks, of course, is Koot-NAY Silver, symbol KOOYF in the US. Her next question: is it easy for one to check whether a gold bar is actual gold and not something else? Yeah, I say, measure it and weigh it and see if everything checks out. If you don't have a scale, get one. Maybe you can buy a scale with Bitcoin. You can also drill a small hole in the bar to see if it's filled with tungsten, which has the same density as gold and is used to counterfeit it often, if you're really into drilling holes and such. Her next question: do you see any challenges associated with retail investors buying small amounts of gold? I say, well, your car might break down on the way to the coin shop. You could get attacked by a bear on the way to the coin shop.
I'm sick of these constant bear attacks. If you want wild bears eating your children and scaring away your salmon, that's your business. But I'm not going to take it. Who's with me?
Or you could get into a car accident, suffer a head injury, and forget you wanted to buy gold in the first place. You could get hit by a train. Or struck by lightning if there's a storm.
You don't want to get struck by lightning!
If the dollar breaks down, the coin shop won't sell you any gold for dollars or Bitcoin. Her final questions: any predictions on gold versus Bitcoin? Maybe.
Prediction? Yes, prediction. Pain.
My answer: money is the most liquid physical commodity in an economy. Gold is the most liquid physical commodity in the global economy. Therefore, since gold is money and Bitcoin is only a derivative of money, all purchasing power currently held in Bitcoin will necessarily fall into gold once the dollar collapses. Since the dollar is what links Bitcoin to gold, and that link is what bestows purchasing power on Bitcoin in the first place. Therefore, Bitcoin will become completely worthless, and anyone with any purchasing power currently in Bitcoin will experience a 100% loss in favor of holders of money. Any additional insights, she says, would be appreciated. Thank you for your time. Well, you're welcome, Helen. Gold is money, I say, as my additional insight. Everything else is a derivative to differing degrees. The higher the degree, the higher on the pyramid, the less stable the asset. Bitcoin is the highest derivative of money that currently exists. And before we end this video, I'm going to go into a very short missive on the gold to silver ratio. It is above 100 right now, which is very frustrating for silver holders. However, check this out. This is the gold to silver ratio in the 1970s gold bull market, an analog to which I believe we are in right now. The gold to silver ratio hit a high of about 44 in June 1973 during the inflationary scare there and the oil embargo. It retagged that in January 1975, but the real move in silver came in the final 5 months of the bull market in gold from 1971 to 1980. In the final 5 months, that was it. In July 1979, the ratio was 32.53, and it went all the way down to 15.13 by January 1980. December 1979, January 1980. It was the same level that it was at in December 1967, 15.67, 15.13. This is the floor. We will approach that once people understand that derivatives of money are dying and they have to get into real money, and they cannot afford gold. Most of them cannot afford gold. Most of the people can afford some amount of silver, and that will increase the demand of silver relative to gold. We have central bank demand for gold right now, which is what's driving the price up from the trade war and other central banks trying to protect their assets by dumping dollars for gold, which is pushing up the gold price. Since central banks do not buy silver, they have no use for it. It means that central banks are waking up to what real money is. They understand that it's gold, but the public yet has not. And until they do, there is still time to stack. So if you still have yet to stack your silver, if I were you, and I do not recommend anything, and I had no silver, I would start stacking now, because the price you are getting for silver relative to gold will not get substantially better than it is right now. This is Rafi of the Endgame Investor with this week's Silver Report for the Endgame Investor, brought to you by Koot-NAY Silver, symbol KOOYF in the US and symbol KTN in Canada. And I'll see you guys next week. And once again, have a good Friday.
So the combination is 1, 2, 3, 4, 5.
The world watched in amazement as he unlocked the mysteries of Al Capone's glove compartment.
Aha! Road maps!